Welcome back. I hope you're having a fantastic day. Let's take a look at what's going on. The Federal Reserve minutes, the FOMC meeting minutes are out and markets are reacting. Markets were slightly up today to a little bit flat until the minutes came out. And the interesting thing is Bitcoin kind of reacted too. Bitcoin was up around 29.9, almost 30,000, and immediately reversed back down on the release of the minutes. So did Ethereum, Avalanche, Solana, all the top coins were reacting as well. So very interesting. Let's take a look at why, because the Fed minutes are pointing to more rate hikes quicker than the market anticipates. There was a lot of talk by analysts and economists that the Fed might be easing up a little bit because there are some people thinking that inflation has peaked or is rolling over. But, the Federal Reserve officials earlier this month stressed the need to raise interest rates quickly and possibly more than markets anticipated to tackle a burgeoning inflation problem. Meeting minutes released Wednesday showed not only did policymakers see the need to raise the benchmark borrowing rate by 50 basis points, 0.5% basically, but they also said similar hikes would likely be necessary at several meetings. They further noted that policy may have to move past a neutral stance where it is neither supportive nor restrictive of growth, an important consideration for central bankers that could echo through the economy. Most participants judge that 50 basis points increases in the target range would likely be appropriate for the next couple of meetings. The minutes, in addition, stated that the FOMC committee members indicated that a restrictive stance of policy may well become appropriate depending on the evolving economic outlook and the risks to the outlook. So the key takeaway there is watch the next inflation print. If inflation does not decrease a little bit, if it goes up substantially, the Fed is going to potentially be more aggressive, but at the very minimum, they're definitely going to raise rates again, 50 basis points. So that takes all of the speculation off of the table in terms of what the Fed's going to do. And a couple of them saying, well, we may not need to raise, but 25 basis points or whatever. The Fed is in a position, their back is against the wall. They've lost credibility. They have to fight inflation. They have to get it under control because inflation is slowing growth. We're seeing it day in and day out with earnings, with layoffs and things like that. So we are facing stagflationary environment, which is low growth and high inflation. So the Fed is definitely in a bad situation right now, and there may be no way out of it. So we'll just have to see where things go, which again creates opportunities. All of this is just going to create opportunities on the back end. So no need to worry or panic. Tough economic times ahead. Restrictive policy, markets are repricing, crypto is reacting, real estate market is correcting. All of this is going to lead to generational wealth building opportunities that we haven't seen for 15 years and really since the March pandemic lows. So we might see another little reset like that to where you'll have some real good opportunities to jump in and make really fantastic gains. So let's take a look at Bitcoin here on the daily. But before we do that, let's go ahead and take a look at the Dow. As you can see, still kind of on the upward trend here over the last couple of days, as it does in a bear market declination. The price will react and bounce for a couple of days. It'll drop for a couple of days, bounce, drop, bounce, drop. The key is lower highs, lower lows. That is bear market territory and how the bear market works. NASDAQ, same kind of price action. S&P, same kind of price action. And like we talked about before, you can just kind of go back and look at bear market environments. Prior to the March 2020 collapse, price was kind of rolling over. And then it just dropped right off a cliff. NASDAQ, same kind of thing. S&P, same thing. But the biggest one to look at that's recently comparative would be that 2018 drop in the markets. You can kind of see how price bounced until it ultimately worked its way down to a final capitulation moment. And that's the last time the Fed tightened was back in 2018. So you can kind of look and see how markets reacted back then. It's kind of a rollover situation. Then, of course, the Great Recession of 2008-9, same thing. You can see markets kind of roll over the same type of way each time. They don't just, it takes time to get down there. And then you do have that final capitulation moment when everybody just kind of gets worn out, shook out, and they're ready to go. And if you look at Bitcoin, Bitcoin went through the same thing. So the Fed tightening cycles were, 2014, 2015, right here. 2014, 2015 cycle, bear market cycle for Bitcoin. That was a tightening cycle by the Fed, 2017, 2018. Bear market cycle for Bitcoin. That was a tightening cycle by the Fed. And then, of course, the reverse of that was the Fed bull market on. Really from 2009 on, we've been in a bull market since Bitcoin's existence, but the March 2020, all of that infusion of cash and liquidity, low interest rates, big parabolic run up in all assets, including Bitcoin. So now we're in this consolidation phase here for the next leg down. And to kind of see if we're going to break this, this level here and sweep down and check some of these previous all-time highs in the market. And of course, what we've been tracking more than anything else is that 200-week moving average, because Bitcoin in its history, every time it breaks the 100-week moving average, it goes down and checks the 200-week moving average, which always indicates the bottom of the bear market. Every time, all the way back to 2013, 2014, price breaks the 100-week moving average, goes down, hits the 200-week moving average. 2013 and 14, it stayed down there for quite a while before it came back. 2017, 2018, let's see, it stayed on the 200-week moving average for basically, looks like, let's see how many weeks that was. Let's go back here and check it again. Basically 8 weeks, it stayed on the 200-week moving average. The March pandemic, only a couple of weeks. That was a very isolated short thing. Again, I believe the bull market run would have started right here if it was not for the pandemic. No telling how high it would have went without all the Fed tightening. So all of this is kind of like just real artificial. So I think what the market's trying to do now is figure out fair price, fair value, and we'll end up, we'll just have to wait and see. Without the Fed without the Fed pumping the economy, keeping rates low, we just don't know where Bitcoin can and will go, because it's been in that quantitative easing, low interest rate environment in its entire history, which has led up to a lot of these run-ups. So we just won't know until we get there what that's going to look like. But here's that 200-week moving average. And right now it's coming in around 21,000, 21,900, 22,000 range. So as price continues to work its way down, if we look at the amount it's dropped from the 100, it's basically been 3 weeks to drop 20%. So if we go 3 weeks over, 1, 2, 3, 3 weeks over here, which would be May, June, middle of June, and drop 20%, we could see potentially around that. Well, that's about 24,000. So there's a lot of interesting different technical analysis out there right now that's kind of targeting that 24,000 area, which our wick low for this range was right at 25,381. So the question is, let's take a look at that in some of these previous cycles. The question is, price had dropped there, bounced, moved on, dropped, wick low, bounced, moved on. So there's no consistency in terms of whether or not this wick low is some sort of a range finder, or if we're going to, price is going to break below that again. As you can see, last year you had these wicks before price took off. So very interesting. This move here looks a lot like this move here. And during that cycle, let's look at it on the daily, of straight down, basically. You can draw that trend line down, and when price breaks it, you can expect some upside. So working on a new trend line down. So let's take a look at what that looks like. I like to use these closes here to track this price action. And if you kind of run this trend line down, we were watching that earlier this year when price was kind of rolling over from all-time highs. And what we were waiting for was the price to come over and break this trend line and continue on from there. Unfortunately, it has not been able to continue up, again, just because of the economic environment we're in and the monetary policy of the Fed right now. So this is our next trend right here to see if price gets over here. So as it works its way towards this trend, will price, continue down, kind of work its way over here and bounce and then reject, or will it break up, check, and then continue on? And right now, I mean, it just really is unreasonable to expect markets to rebound and recover at this level without the Fed being involved. So there's more downside yet to come. The Fed is out of the game. We're in a bear market in all assets across the board, in conventional markets, in crypto, stocks, everything is in a bear market right now. The dollar is bouncing a little bit today. It has been rejected lately. Generally, as the dollar goes down, risk assets go up. As risk assets go down, the markets go up. So that's been the general line that we've been following. And then when you look at Bitcoin on the hourly, nice little trading range here. If you're a Bitcoin trader and you're in and out, scalping, day trading, whatever, it's been a nice little range, bouncing between that 28 and change, 28.6 to basically 30,000, with some extremes on the upper and lower range of that. Eventually, this will break one way or the other, but this could go on for weeks to months before anything happens. There's nothing really pushing this move to have to do anything. I guess if you go and you look at, some people are drawing some little patterns here. So let's take a look at that and see what we come up with. So if you take some trend lines, and again, everything is, to me, is based on closes. So if you take this closing trend line here and look at the closes, you can see price kind of working its way in here. And if you draw one here on the closes here, then you would say it's going to do something here soon. But this could just kind of continue this way for a while. It doesn't have to do anything either way. If you go with the wicks, it looks very different. But at the end of the day, we've seen this before, and we've seen it in a couple of areas on price. So this little area here looks a lot like it did right here. This was more of a downward action. Looking a little bit like this consolidation here, it popped up. This one here popped up and down. Right here, a little consolidation. This area here, a little consolidation. So this range here, and then it rolled over and then popped up. So we've seen this before in a lot of different ways in a lot of different areas. We'll just have to wait and see how long price kind of works its way over. And it could continue to do this for a while and then ultimately drop out, check these lows again, and then ultimately see, how far price is going to go down. And a lot of this, is going to be relative to the stock market and what's going on there, because, again, these are risk assets and we are in a risk environment, risk off environment. So crypto is going to react a lot like the traditional markets. Risk assets are acting right now. So we'll just have to keep an eye on these things, keep an eye on the next CPI print coming out next month. And of course, the Fed's reaction to everything and big market events. And, like I said, it's you can expect some bounces, but to expect bull market back on new all-time highs or anything like that is just not realistic right now in the environment that we're in. What's realistic is continuing to consolidate, shake people out, maybe check some lows, kind of scare people, shake people out, maybe get one final capitulation to a range low, and then maybe return on for some more upside. But without the Fed, without zero interest rates like we had, without monetary policy changing and the Fed, pumping the markets up, it's just not realistic to expect to go back to these all-time highs that we had, because the market is repricing to the new stance of the Fed, the new economy, the new things that are going on. And we never hit any of those highs without the Fed. It's been bull market on, it's been quantitative easing, it's been zero interest rate, all of that since 2008-9. So the market has to get back and find the bottom, find the lows, find where fair value is for investors. Then we can continue back to what a normal, growing market, bullish market cycle looks like for stocks, 10% a year generally. And for crypto, obviously that is a little different scenario, a little different animal. So we'll just have to wait and see. And what we've seen in the past of Bitcoin, where it has gone and the kind of exponential moves it can make. But again, that was in a very different monetary environment. So we'll just have to see. Nobody knows. And until we get to the other side of that, get some spot Bitcoin ETFs, get regulation, get control over the stablecoin environment, things like that, and provide clarity and confidence for investors, then that will potentially change the game. So every day is a new day, and these are the things I am looking at. I'll see you in the next video.